Hello and welcome to Building the Premier Accounting Firm. This is a podcast to help you actually have the premier accounting firm in your area, offering quality accounting services and getting paid what you're worth. I'm your host, Roger Knack, and I'm excited to have each and every week exciting experts, people in their own right that have something to share with us as we actually work on our businesses to help us address various topics such as marketing, selling, offering quality accounting services, client retention, client onboarding, mental health, and so much more. Each and every week, we have these guests on to actually help us take the time out of our day to look at what we can be doing to improve our businesses. And as I mentioned, get paid what we're worth. And today's going to be no exception. We actually have on as a guest, Adam Lean. Adam happens to be the one that he would consider himself a former accountant. He's a two-time entrepreneur who built, scaled, and sold two businesses. While helping other business owners, he realized his passion was teaching and providing tools to business owners to help them make more money and have peace of mind. Adam lives in Jacksonville, Florida with his wife, Holly, and their Great Pyrenees dog, Cooper. He is the co-founder of the CFO Project and is a leader in the training financial professionals and offering outsourced CFO services. Now, through their exclusive membership program, they provide training, community, and support to accounting professionals, CPAs, bookkeepers, and other individuals to help them actually have the heart to help business owners improve their businesses. So, Adam, welcome to the show.
Roger, it's really good to be here. Thanks for having me.
You are so welcome. This is going to be a lot of fun. Now, this is a topic that really is quite timely for me. It's something that's been on my mind. It's something I'm discussing regularly, and I'm excited to kind of get to the depths of this. So I'm going to start with just a little bit of your history. You obviously have built and sold two businesses. Let's back up even before that and get into accounting. Why did you get into accounting when you were younger and looking at careers? How did this get all started?
Honestly, I have no idea why I chose accounting.
Why did you do this?
It's in college, I actually ran a couple of family entertainment centers. So like I think a Dave & Buster's type facility, but with skating rinks. And so I really enjoyed that. I worked closely with the owner of these facilities, and I was a 22-year-old who had responsibility over 60 employees, and I mean it was a blast. And so I decided to major in business, and I had to choose a specific major in business, and so I just chose accounting. I honestly don't know why. It was a blessing in disguise because accounting, of course, is the language of business, and so I'm glad I did it. So after that, after I graduated college, I ended up getting a job at a major theme park as their accountant. And that was a blast and I ended up getting that job because of my experience running these family entertainment centers in college. And that was a blast. I enjoyed working at the theme park as the accountant. Literally, my office was right next to one of the roller coasters. And so every 3.5 minutes, I heard screams of people coming around the corner. So that was a lot of fun. But Roger, I was incredibly bored doing my actual job, which was being an accountant.
So let me get this straight. The mental image that I've actually concocted for me is seeing the younger 20-year-old of you basically out on the disco dance floor with roller skates on, with kind of a little fro going here, and dancing around at like midnight with the disco ball in the air. So that's the image that I've concocted in my own mind with this.
Not really. I did skate. It was fun building the actual the businesses. I had the pleasure of serving the owner of these facilities. She actually built a brand new multi-million-dollar family entertainment center about 45 minutes away from my college. And so she asked me if I would be the operations manager of that. And I said, absolutely. So I got to help actually build. I mean, I was there literally when it was dirt, and I got to see it all the way through grand opening, and just the business side of it really intrigued me. And I really enjoyed helping her grow the business. And I mean, that was a lot of fun for me.
Well, what I like about this is you obviously have gotten a very good feel for business, seeing businesses go from, as you're describing, dirt to grand opening. I like the fact that you're working for a few businesses here, a family-owned business, a major park. Why go? I mean, you said it was kind of boring, but why go out on your own and start your own business? Where did that entrepreneurial spirit come from?
Well, I think it stemmed from the fact that I was incredibly bored at my day job because my job, as we all know, accountants, our job is to record the past. I mean, that literally is the job. You're accounting for and you're keeping the books for the business. It's a very important role. It's a very vital role because the business has to make decisions based on that. So it's very important. But because of my background in college, I was so used to actually being involved in the growth of the business and in strategy discussions. And
Hmm.
honestly, that I had zero, I had zero involvement in that. I went from, I tell people I went from being the big fish in a very small pond to being like a tiny minnow in a very large ocean. And I just didn't like it. So
I
I had
get it.
all this pent up energy. And so at night, and on the weekends, I started a business. And this was in 2006. And so I started a business online because that was something I could do with a day job. And online, this is before, all the big box stores started waking up to the fact that the internet is here to stay. And I didn't have that much competition. And this was even before Amazon started selling my category. And so within 3 years, I had sales north of $1 million. And I was able to quit my day job because I enjoyed uh, I had the entrepreneurial bug, and I enjoyed working in the business, getting my hands dirty, and actually growing and being a part of all aspects of the business. Sales, operations, logistics, and of course financial. Um, and then I started helping. I started helping other people that I knew in the e-commerce world because I got involved this was in Atlanta. Uh, I joined this thing that Georgia Tech had called the Atlanta Web Entrepreneurs.
Okay.
And it was a bunch of geeky people who got together twice a month at one of the conference rooms, and we all just discussed e-commerce. And it was a lot of fun, but nobody really knew what they were doing. I mean, e-commerce was almost a brand new field, but it was a
Oh,
lot
yeah.
of fun. Um, and but through that, I met a lot of people, and I realized that I took for granted the fact that I understood the numbers because I was an accountant. None of these other people did.
Yeah.
And they were flying blind. They were running their business, they're growing their businesses, but did not realize, why they were losing money or why they weren't growing as fast or why they didn't have enough cash in the bank. And because they didn't understand the numbers. They didn't know what was driving all the parts of their business. And so I started helping a few of them, and that sort of morphed into a business advisory outsourced CFO service. But I didn't start off by thinking I want to start an outsourced CFO service. It was simply just me doing my craft of building a business while helping other people with their business, just using my accounting background.
So obviously you have the first business that's in place at that point. Have you sold it before you got into the CFO services, or is that the second business?
That the CFO service is the second business, but I started helping other people while I had my first business.
Gotcha. So you sell the first, you get into the CFO space. When is it that you're running into and meeting Jeff Prager?
Yeah, so I ended up selling my business to one of my largest suppliers, actually, my e-commerce store, about 8 years after I started it, and I then decided to go full time into actually helping other businesses formally with growing their business as their outsourced CFO. And I started helping. My intention was to get 3 clients and work 40 hours a week for just those 3 clients and make a
Okay.
full-time job. But
Okay.
then I got into it and realized that there's that small to medium-sized businesses, the ones that I were used to helping, the past decade, they needed help as much as the big businesses, businesses doing north of $10 million, the ones that typically can afford an outsourced CFO. But the small to medium sized businesses, they needed a CFO even more because it was really just the business owner that was running everything.
Yeah.
And most business owners start a business because they are an expert at their craft. A dentist starts a dental practice because they're a dentist. And so they don't have the ability to employ a ton of accounting staff and operational staff and sales staff. It's just them. I mean, think of the average, general contractor, heating and air business owner. I mean, it's them and a handful of tech, maybe a couple office people and their crew out in the field. That's it. And so I decided I wanted to pivot and actually help small and medium-sized businesses doing between $500,000 and $5 million in annual revenue.
Okay, so we've been throwing around this word CFO, Chief Financial Officer. Tell me in short order, what is a good definition that we should be using for what that role is?
I mean, honestly, and everybody has their opinion on what a CFO is. For big businesses, a CFO means one thing. Think of the CFO for Coca-Cola. Their job is to track the profit and cash flow, to analyze the business's strengths and weaknesses across all the divisions, and then propose corrective actions. Advise the leadership team on what they need to do. I mean, their job, quite simply, is to keep the business in business and to keep them making money. Well, doesn't all businesses need that, regardless if you're the size of Coca-Cola or if you own a small, mom and pop retail store on Main Street? Every business needs somebody to do those things. And so when I say outsourced CFO, I mean literally somebody that does those same three things: analyze the business's strengths and weaknesses, track profit and cash flow, and the most important thing, propose corrective actions. And that's what I mean as an outsourced CFO. Now, other people, and I'm going to use the word fractional CFO.
Okay.
There's this term, fractional CFO. I describe that as somebody who has a financial background coming in and solving a particular problem for the business and then leaving. So a business might hire a fractional CFO to fix their accounting system, or to help them raise money, or to help them install an inventory system. They come in, they fulfill a project, and then they leave. What we're proposing is instead of coming in for fixing a problem, which, by the way, the business owner knows there's a problem, they just don't know how to identify it. So how are they going to tell you this is the problem I need fixed? Instead of coming in, fixing a problem, and leaving, we propose being their relationship CFO, developing a relationship and working with them month after month, year after year, as their outsourced advisor, their go-to financial and business and strategic advisor, which is what we call an outsourced CFO.
Interesting. I'm going to add to your definition of a CFO simply because of the experiences I've had. I agree with everything you've mentioned, but the CFO role, as I've seen it, as I've been working with clients, is also helping the business owner basically identify standard operating procedures within their business to address, say, how they're going to manage and process receivables. How do they process and manage payables? And it's coming up with basically these processes that for them, they just kind of ad hoc, typically within the business model, start to build with influences that they may have from other people that they employ. But that CFO role, when they come in, they can establish, so when we're running the business, where are we using the money from? Lines of credit, business loans? Are we using, this strategy or another? How are we managing receivables? How do we take care of collections? There's a lot of policies that the business owner may just have in place that could use a great deal of attention from that CFO. And then the other, as you were describing relationships, is they're oftentimes, as a CFO, able to help them build the relationships with their lending institutions, whether it be banks, the investors. It's also working with, in the case of their vendors, those net term relationships of how often they're paying and such. All of those types of relationships are what the CFO can come in and influence and affect in a very positive way and show net profit from each of those relationships, because they really can move the margins around as they're actually involved with the business owner in either helping them get the strategy identified and implementing it with those institutions, or it's actually helping them actually go in their behalf and have those conversations. So I really do feel like you were describing, it's really setting up, I think, the business model a little bit more strategically, more defined, and in that capacity, building, as you're describing, a long-term relationship, simply because they're not coming in and merely doing a particular project. It's really this year after year relationship of adapting and molding how that business is managing its cash flow, interacting with its investors and where it has its lines of credits, and also the vendors that they're interacting with. So definitely a very important role. So here's my next question. As accounting professionals, we sometimes trip into those types of capacities, stumble into those conversations, and maybe don't even monetize that kind of a discussion. What's the transition that a bookkeeper, accountant, tax preparer takes or makes when they realize that they're starting to have those conversations, and now's the time to formally price that service out, discuss that service, and fulfill that with the client?
Yeah, that's a great question. The first answer is that your clients want someone that they trust to tell them what to do to have a growing and more profitable business. And they're looking at you, the accountant, the bookkeeper, they're looking at you because they already trust you, that you already have access to all of their numbers, their financials, things that they would not share with anybody else because they're likely embarrassed with the state of the health of their, the financial health of their business, but they trust you with it. And so they're already looking at you. They kind of expect you to give them advice, to tell them what to do to have a growing and more profitable business. And so, but most financial professionals, accountants, bookkeepers are sort of giving advice, but there's two problems. One, they're giving advice, but they're really not sure if the advice they're giving is quality. And so because of that, the second problem is they're not charging for it. And so the bookkeeper or the accountant, they'll do the taxes, they'll do the books, and then the business owner will probably have several questions about strategy. Well, what do you mean? I made $100,000 last year, only have $4,000 in the bank. How did that happen? What do I need to fix this year? And the bookkeeper, the accountant, is giving them surface level advice that's really not helpful because that's not what they're getting paid for. They're getting paid, literally, the accountant and bookkeeper is getting paid to keep the books. That's their job. That's why their client's paying them. But again, the client wants you to tell them what to do to have a growing and more profitable business. So to answer your question, the very first step is realizing, hey, you have a service here that your client already wants. They just don't know it yet. And if you position the service in the right way to them, they will absolutely hire you or be glad to pay you more for this type of advisory service, this formal advisory service where you are now not only doing their books or doing their taxes, but now you're actually helping them do the one thing that they care about, which is being a success.
There's two things that I would like to share with this because I've had this conversation with so many accounting professionals. It's first, they do have these conversations. They actually see each of the clients asking a question here and there. They're little one-offs. And the accountant starts to realize, hey, I'm starting to actually advise or get involved with some strategy. They start to see some discussions happening where the business owner is interested in their opinion and asking for their input. And these happen on occasion. And they're starting to realize that this business owner has a simple level of trust with me, that they're willing to bring this to my attention and discuss it with me. So I'm in this strategic, trusted space. So I'm having opportunity to contribute. The second thing is they at night, they start to realize that with the numbers and information they have, like you were describing, they actually have epiphanies, ideas, questions that they want to be asking the business owner that literally could impact that business and its situation. And yet they're still struggling to realize, how do I transition from that of the role of accountant tax preparer into this CFO advisory space? How do I strategically move into it to where I'm paid for this and month after month deliver in that space? And so that's typically that transitional thing. They have the epiphany of, okay, the door is opening. I can see that I can go in here. How do I move in? And how do I deliver month after month after month? That's the first question that I really see them asking. And then obviously it comes to pricing. How do I price for this?
Yeah.
But the third thing I want to just point out here is I think this is a natural evolution as a business evolves into offering what I refer to as the three core services of a full service accounting firm. I think it's only natural that you're expected to offer bookkeeping and accounting services. It's only natural that you can then easily offer tax preparation and perhaps tax planning services. So the third element is basically going in and offering CFO and advisory services. And so that's the space that we're talking about. So how does someone get started going into that space? What's some of the thoughts you have about that, the suggestions? I've got a few. What would you say is that first step, or how does someone get started?
Yes, a great question. I have a couple of tips here. The first is we've got to court our leads. And a lead could be one of your existing clients, one of your existing bookkeeping or tax clients, or it could be a business owner you haven't met yet. The idea is that we need to court them over a series of steps so that during this courting period, they're building trust and rapport with you. So that the end of the series of steps where you're courting them, they've built enough trust and rapport that they are going to do what you suggest, which is signing on to your CFO service. The mistake a lot of accountants make when they want to transition to becoming a CFO is they'll blast to the world, I have a CFO service. Do you want to buy? The problem with that is that most business owners, A, don't know what a CFO really is. And if they do, they think that big businesses like Microsoft or Apple needs a CFO, not my $3 million construction business. And so when you go out and try to and promote a CFO service through traditional marketing methods, then you're really not doing yourself a service, because your clients, your prospects, even your existing clients, tax and bookkeeping clients, that message doesn't land with them because they don't understand a CFO. So what instead, again, we need to court them and give them messages that do land with them. And here's what I mean by that. And by the way, when I say courting, I mean, I'm from the South. Jeff Prager, my co-founder, makes fun of me all the time for using the word courting, because think of, if you want to marry, if you meet somebody and you want to marry them one day, you don't propose on the first date, because that person's going to think you're crazy. And so instead, you need to court them over a period of dates, so that after, several months or years or whatever, then when it's finally time to propose, to pop the question, they're going to say yes, because at this point that they like you and you like them. Same thing with this service. This is a long-term relationship with clients, and they have to first, like I said, understand what a CFO is, and B, understand that they need one. And that cannot happen in a very short period of time. That has to happen over a period of steps. So the first tip is to court them over a series of steps. Well, what are those steps? The first thing you need to do with a existing bookkeeping or tax client, or with a lead that maybe you haven't met yet, that you'll meet next Tuesday at your BNI meeting or next Thursday at your Rotary Club meeting, is when you come into contact with a business owner, then the idea is to just be inquisitive. Ask them questions about their business. Because here's the thing, they know enough to know that you are a financial professional, whether you're an accountant, a bookkeeper, CPA, enrolled agent, it doesn't matter. They know that you are a financial professional. So when you, a financial professional, start asking them questions about their business, then that's completely different than what most accountants do. Most accountants will go into a sales conversation, but now you're asking them questions about their business, and you're understanding what makes them tick and understanding what their vision is for their business. And by the way, most people, when you start finding out what makes them tick and what their vision is for their business, they're not going to talk in terms of numbers. And that's where we, as a business advisor, CFO, can separate ourselves from all the other accountants and bookkeepers in the world. And instead of talking like an accountant, we talk like a business advisor, a business strategist. And your prospects will take notice. So here's an example of how this actual example of how this happened in real life one day.
Okay.
I was actually out walking my dog. It was about 6 years ago. I was walking my dog. We had a new neighbor move in next door. New neighbor was cutting his grass. So he sees me and he turns his lawnmower off, comes up, we shake hands. He's like, "Hey, I'm so-and-so, nice to meet you." And then he asked me what I did for a living. And I said, I help businesses, small business owners, improve the profitability and increase the cash flow in their business. Notice I didn't use the word CFO. And I did not realize this, but he was actually a business owner. He said, "Really? Tell me more." And I said, instead of telling him more, instead of going into a sales conversation, I asked him, again, you have to be inquisitive, "Well, what do you do?" And he said, "I own a large welding business." In fact, it turns out he owned a multi-million-dollar welding business in town. And so I said, "Well, tell me about that." And he starts telling me all his problems in his business. We've never met 5 minutes before this. And yet he's telling me, now that he knows I'm a financial professional, he doesn't really understand what that means, but he at least knows that I'm a financial professional. He starts telling me about his problems in his business. And so I said, "Hey, I help businesses just like you. Let's sit down and go, let's get some coffee. Are you available tomorrow?" And he said, "Absolutely." So we actually met at a coffee shop, and we met for almost 2 hours. And in this time, I asked him a lot of pointed questions about his business. And there's specific questions that gets the prospect talking. And he talked about 85% of the time, which is the goal, because you want to understand the client's pain points. You want to understand what makes them tick and the vision they have for their business. Because when it comes time to selling the CFO service, pitching the CFO service, which did not happen for another few steps. Again, we got a court. When it comes time to pitching them, we've got to understand that people and business owners are people buy on emotion and justify with logic. So you cannot sell a CFO service based purely on logic. And that's what a lot of accountants do. "Well, I could do a forecast for you. I could do a ratio analysis. I'll do budgeting. I'll do pro forma analysis." That does not land with business owners. They don't care. What they do care about is you talking about what makes them tick. And how do you know what makes them tick? You've got to ask these questions. And so in this first couple meetings with a prospect, you've got to ask these pointed questions and get them talking so you can understand what makes them tick and what drives them. And so after 2 hours, I said, "Great." I said, let me offer this. I think I can help you, but instead of telling you how I can help you, let me show you. Let me offer to do a financial assessment on your business. I'll spot red flags. I'll spot opportunities for growth, and I'll put together a plan of action of what I think needs to happen to meet the goals that you just gave me over the past 2 hours. And he said, "Absolutely." Now, 24 hours prior to this, we not even know each other. And now all of a sudden he's giving me his financials. And, a series of steps later, I did the assessment. We met again. And very first meeting where I actually pitched the CFO service, he signed on because I was speaking to his emotions. I was helping him accomplish what he wants to accomplish in his business. And so that's a perfect example of how a business owner, an accountant, bookkeeper can transition to taking off their accounting hat and putting on their business advisory hat and selling a CFO business advisory service.
Well, you've shared a number of nuggets in here that I definitely want to point out that stood out to me at least. The first being that this is an emotional type thing. It's a relationship sale. And what I mean by that is I'd have to agree with you that as an accountant, we're dealing with the numbers, the historical data. We're dealing with a lot of things that in some cases the business owner could be, I don't want to say emotionally detached, but the fact that we're dealing in the accounting space, they just may not understand it and can't get involved. But when you get into the role of that of a CFO, it definitely does become one where there is a little bit more of vulnerability. They have to open up and share a lot more of their vision, give good clarity as to where the company's going so that we can take that information and now turn it into numbers that reflect what's going on. It's basically taking what's happening in that business owner's minds as they kind of dream about the future and where the business may be going. And we try to now, in hearing that, prepare now the story in a narrative that's numbers based. And I really like that part because all of a sudden that trusted strategic advisor is taking shape. We're starting to see how that's really relevant. The word courting, yeah, for a lot of people that might be humorous, but as the word courting, it clearly defines something that you're doing. You're purposefully involved in this relationship with a specific end goal. You're trying to actually become that trusted strategic advisor. And so that interaction that you're having with the client as you're courting is intentional. They need to see you as someone that they can, with rapport, trust, open up to, feel comfortable with in a safe environment, feel a safe space exists, and see you as the expert, that literally they can lean on that. And the way you demonstrate that being of an expert is just like you were explaining. It's questions. It's letting them speak about 85% of the time, where you're asking the right questions, getting them to open up. And oftentimes what they're divulging happens to be stuff that they've never shared with anyone else verbally. It's in their head, it's there, but nobody's ever been interested enough for them to share it, nor have they perhaps been in a safe enough space to share it. And here you are asking the right questions, providing that environment. They're now feeling vulnerable, opening up to you. And then in all of this, you're able to now, as you were describing, take that information, put it into story form in a numerical way through break-evens, forecasts, budgets, pro formas, all these things that the business owner can see somebody understands and is listening to me, because here it is in black and white on paper, and it's mirroring what I'm trying to build. And here I can see what I need in order to achieve those goals. So I'm liking all of this that you're sharing with me. I want to go back, though, to something that was really at the beginning that might have been overlooked. You were talking about marketing. You were talking about trying to identify who you're going to be targeting. Perhaps it's current clients, maybe new clients. And I really think that there's something to be said about this process. And so I just wanted to summarize it, because there's a distinct difference between marketing and selling. The marketing is identifying who is that potential client and having clarity as to maybe the niche you want to work in, the types of businesses you want to work with. The sales process is that courting that you described. It's helping them become educated as to what the role of a CFO is, what they could benefit from having a CFO involved in their business. It's educating them to why they need it. So we have to be clear on what we're going to help communicate for them to see us as that expert. And then you get into this position of starting to deliver. And so the next question I wanted to have is, what are some advices you have regarding pricing? I've got to distinguish what I'm about to do as being different from the accounting, the bookkeeping, the tax that I'm involved in. How do I price this CFO relationship?
Yeah, great question. Pricing the CFO relationship is part of the educational process as you court your prospect. When it comes time to proposing a CFO service, at this point, you'll have known a lot about your prospect, what makes them tick, their vision for their business. And then you'll also share with them how your service will help them hit their vision, accomplish their goals, help them become successful. And then you say you essentially do this by providing a monthly, this is what we recommend, a monthly service, because we got to keep it very clear for our prospects, because again, they're not in the accounting world. We're in the accounting world. They're not. So we've got to make this very clear and easy for them to understand. So we provide a monthly service where once a month, I will meet with you. And before this meeting, I will actually analyze your financials. I'll study your numbers, and I will come to you during this meeting and give you 2 to 3 things that I think needs to happen for you to have a growing and more profitable business. And so to do that, this monthly meeting and this entire service is one flat fee per month. And so we recommend that you charge a flat fee per month. We recommend the minimum that you should be charging is $1,500 a month for this service. Most of the people in our program are charging between $2,500 and $3,500 a month, but a flat fee per service. Now, here's a couple things, a couple caveats. One, you need to understand that you're charging for your value, not your time. And I know a lot of bookkeepers and a lot of accountants, they charge by the hour, which may be fine for that service. But as a CFO or business advisor, we've got to put our advisory service hat on and know that we have immense value to our client, and we've got to charge for that value, even though it takes on average 4 hours per month to conduct a CFO service the way we teach it in our program. If you charge for just 4 hours, you're going to go. You're not charging for your value. You're going to go broke, and you're underselling yourself. In that 4 hours, you are potentially giving your client hundreds and thousands of dollars worth of advice, if you will, that can help improve their business. So we've got to charge for our value. Here's an example, Roger, of my favorite example of how this actually came to life.
All right.
One day. One of my clients was a colonoscopy doctor. He owned a practice that had 15 other doctors, and all they did was they specialized in colonoscopies. Of course, I'm not familiar at all with the medical world, much less colonoscopy services. But he hired me because the way I courted him and pitched the service, he even literally said on the day he said yes to the service, he says, "I'm a good doctor. I'm not a good business person. I'm not a good CFO. I need this service." So it was a match because I'm not an expert in the medical field, and he's not an expert at business and financial strategy. It's a great match. So that would help anybody that's dealing with imposter syndrome, not feeling like they're qualified to be a CFO. We get that a lot. But anyways, he became a client for several years. About 2 years into the service, I was analyzing his numbers. I was preparing for our monthly meeting, and I realized that one of the drivers of revenue in his business was the driver of conversion rate. How many leads he was getting that was actually converting to a prospect, to an actual paying client, a patient that actually got a colonoscopy. And then I thought, most of his leads are coming from family practitioner doctors. So a family practitioner will say, "Steve, you need to get a colonoscopy. I'm referring you to this person, my client." Now, if I was told by my doctor that I needed to get a colonoscopy, I'm going to be sure that I get a colonoscopy because you could develop, polyps, which you could turn cancerous, right? I'm going to take the advice seriously, but only 60% of his referrals that he was getting actually showed up for service.
Interesting.
60%. So in that case, a referral in his world is a lead. Them showing up and getting their colonoscopy service done, that was a conversion. But his conversion rate was only 60%. And so I looked into it, and that was accurate. So we met the next meeting, and I told the client, I said, "I want for the next 2 months us to focus on one metric, one driver of revenue. If we could increase your conversion rate from 60 to 64%, just 4 percentage points, that will add $400,000 to your bottom line." And he was like absolutely flabbergasted. He knew that not everybody showed up, but he didn't realize it was that low.
Yeah.
But then not only is that additional revenue, but think about it. The 40% that don't show up, he had to have a room reserved with 2 nurses, 1 anesthesiologist, and 1 colonoscopy doctor. 4 people reserved. That 40% of the time was just gone to a waste. And by improving that one metric, he was able to improve, and we improved the metric, $400,000. That would have paid for me for over a decade of working with him because I'm charging for my value, not my time.
Yeah. I love this story simply because it illustrates a very important part of when I'm working with clients and I'm in that CFO capacity is we're talking about key performance indicators. And in that discussion, we're trying to identify what are the leading and lagging indicators that we need to be watching in the business. Mm-hmm. The leading indicators are exactly like you just mentioned. Before the money is even realized, what are some of the numbers that we can watch? And if we can improve, thus change the lagging indicators. And so your example of the leads coming in and the conversion rate of those to paying customers, that's a perfect example of paying attention to the leading indicators because you could increase the number of referrals coming in. You could increase the conversion rate as you described of those referrals, taking it from 60 to 64. And if you can illustrate very clearly in a financial terms what that worth of that lead is and so forth, all of a sudden, what we're able to do is help the business owner see, okay, I need to come up with a better way of maybe confirming that appointment, getting the customer to feel comfortable to coming in. Maybe I need to give better directions. What can I do to further ensure that that client is going to show up for the procedure? You go from that 60 to 64%, like you were explaining, $400,000 is netted. That's a great leading indicator that when given attention can really turn the business. And the business owner wasn't aware of it. And yet in that CFO capacity, you were able to see the numbers. The way I imagine this is presume that you're watching the movie The Matrix and you see on those monitors all these digits that are just cascading down in that green film on the screen. Well, basically, that was meant to represent all the coding going on to provide the experience that we experience here in life. Well, the business owner is experiencing it, but the way we see it is through the numbers. Numbers is the language of the business. And so we're just seeing all these numbers come through and we're able to articulate, hey, if we just change these few things, I can make that not be prime rib. I can make that be lobster. And all of a sudden, it's just like mind blown. This is an opportunity for the business owner to work on their business and realize so much more potential than they really thought was possible because they didn't see the ramifications of that 60 to 64% change. They didn't realize it. And yet you were able to communicate it so effectively. So excellent example here. So I do want to kind of jump into this a little bit more because working with so many accounting professionals that try to make this transition, one of the challenges they face is, okay, I talk to a business owner, I get them excited about the services that I can offer. I offer them a fee for the services. They bite, they say, yes, please, I need your help. I've got a client. Month after month, I'm supposed to be working with them. And honestly, you did give us a great example of what that monthly interaction looks like. But help me address the fear that some of the business owners or some of the accountants have as they work with business owners to realize, what am I going to do with this person 6 months from today? What am I going to do with them 12 months from today? They just agreed to pay me to be this person. I know what I'm going to do next month, and I think I know what I'm going to do the month after that, but 6 months, I'm clueless. I'm like, oh my heavens, in 6 months, I'm going to wake up and I'm going to go, I've got a meeting with Tom today, with Sally. I don't know what I'm going to do. How do you help address that for the accounting professional to help them realize, no, you're going to be okay. There is a solution here. There is a system we can follow. How do you address that?
Yeah, phenomenal question. There's a couple things I would say to address that. The first is the reason why Coca-Cola, multi-billion-dollar business, still has a CFO to this day is because they want more. So every business on earth wants to make more, and so there's always something to do to grow. So that's number one. The number two piece of advice I would give is we've got to have a system in place so that every month we're almost doing the same steps with our clients, but what's involved in the steps may change, but we still have a system. That way, because if we take on multiple clients and completely customize a service, then you're gonna feel like you have multiple part-time jobs, and that's just overwhelming, and it's not scalable, and it's not a way to grow a business advisory accounting firm. We've got to have systems in place, and one of the steps of the systems of the system, at least the way we teach it, is to give the client an action plan every single month, and this action plan consists of really two parts. The first part is an objective. And this is what you as the CFO would come to the client with. I want your objective for this month to be X. So in the case of my colonoscopy client, your objective this month is to go from 60 to 64% in the conversion rate. And then the second part of the action plan is the next steps. So I've pointed the client in the direction I want him to go in order to stay on track to hit their targets, the revenue, profit, and cash flow targets for the year. I've told him what I want him to do. That's the objective. Then together in the meeting, my role then shifts to guiding the client to come up with the best next steps to accomplish the objective. So my big job was to analyze the numbers and put it in an objective format and tell the client why this objective is important, and then guide the client now for the client to come up with those next steps. I mean, I'm not in his that client, the colonoscopy client, I told him we need to increase the 64% conversion rate. And then I said, so now let's discuss how to do it. And he brought in his office manager and one other person, and we all had a discussion on how to do it. And my job was to sort of make sure that the next steps that they came up with were the right next steps that would accomplish the objective. And that's how we, as an accountant and bookkeeper, can transition to becoming an advisor, even without having any knowledge in that client's industry. Because we're looking at from the numbers standpoint. And as long as the business owner wants to improve either profit or cash flow, cash flow meaning how much money is added to the bank from last year and how much of that I could take out of my business for personal use, or how much I can take out to improve the business, to buy more inventory, to hire more people, do more marketing, et cetera. How much free cash flow is available for me? That's really what business owners at the end of the day want. As long as your client wants more of that, you always have a job.
Exactly. Well, this kind of takes us back to the comment that you made earlier about what the distinction is between a CFO and a fractional CFO. The intent isn't to be with them for a project, for a specific activity. What we're trying to do is actually build a long-term relationship where we're working with this client continually, month after month, year after year. And to give you a case in point example of that, the clients that I've worked with, when I do my initial engagement, just because of ease and explanation, as I explain, it's a 12 to 18 month engagement, merely because I want them to see that it's intending to be long-term in nature, but I don't want to have them feel like they're signing an agreement with me for me to work with them indefinitely. And when I begin that relationship, what happens inevitably is I end up working with that client 24, 36 or more months, merely because of the fact that once that company hits certain milestones, the business model has changed enough that we have to go back through a number of the processes to address the evolution of the business, because a $1 million business is different at $3 million. It's different at $5 million. It's different at $10 million. It's different at $50 million. It's different at $100 million. You're dealing with totally different things. As they grow and expand, they start to go from the local location that they are to interstate type business or international type business. They start to get investors. I mean, the business evolves and they come back to you and they lean back on you as you're growing. And the nice part about this is you get to grow with them. You get to learn and experience new things. It keeps our jobs interesting because they trust us, but yet we're having to go find out about things that we maybe didn't know about. And it could be in the space of accounting, it could be in the space of tax, and it just keeps our profession that much more interesting as we work to help our clients. I think this is so fun and so interesting, and it's so much more lively when we work to add to the traditional accounting and bookkeeping services, the traditional tax planning and preparation services, this element of CFO and advisory services. So very, very good. I've got one last question that I want to ask you. The business that you have, CFO Project, what would you say is what's unique about it as you work with accounting professionals to help them confidently go out there and offer these services?
Great question. I would say that's a really good question. We are pragmatic. In other words, what we teach is real and practical and actionable and has been proven, and we continue to prove it every day. There is zero theory in our program. If you're serious about starting a CFO service, this is the place to go, because you will learn proven steps, methods, and guides, step-by-step guides. To start a CFO practice, to get clients, to sell those clients, and then to provide a service where your client will stick with you for a very long time. And the pragmaticism is one of our 4 core values in the CFO project, because there's a lot of smart people out there that got their MBA and gone to really impressive schools, but a lot of what they were taught was theory that doesn't really translate into real world practices. And what we teach, we live in the real world because we've done it. Our members have done it. We've serviced hundreds of clients over the years, hundreds of thousands of dollars of increased profit and cash flow for our clients, and we know what works.
I love it. Thank you. Fun little question on the side. You've got the dog, Cooper. How old's Cooper?
He's about 10 and a half. He's 120-pound Great Pyrenees.
Oh, my heaven's sakes. And he was the one I'm assuming you were taking out on a walk 6 years ago?
Yeah, that's it. Yep.
There you go. Okay. And as a dog, no other dogs in the house, just the one?
That's right. Yes.
All right. Okay.
Yeah, he's enough. He's enough for about 5 dogs.
There you go. And he's an inside dog?
About 80% of his day he's inside, 20% he's in the backyard, and then 15% of the time he's in the backyard, 5% I'm on a walk with him.
There you go. Okay, good. I love it. All right. Well, Adam, thank you for being here. I'm going to kind of recap a lot of what we've been discussing, and then I'm going to come back to you for a closing thought. So let me begin before I give the summary on inviting you, the listeners, to go to the episode description and find out more what you can about incorporating in your business quality CFO and advisory services. Basically, what you want to do is CFO Project and Universal Accounting Center has teamed up to provide you the training that you need to specifically incorporate this in your service to offer quality accounting, tax, and CFO advisory services in your business. And in this capacity, help you understand how to market, how to sell, how to price, how to fulfill this with your clients so that you can be that trusted strategic advisor. It's in this that you can learn how you can become a profit and growth expert, how you can become a certified CFO project individual, going out there and applying the principles that are found in the Universal Business Builder program. All of these things are intended to help you become, in fact, the premier accounting firm in your area. So go to the episode description and find out there the information you're needing to apply these principles in your business, incorporate this into the services that you're providing, and get paid what you're worth offering these quality services to your clients. It is a game changer in your business as you're able to actually step into your clients, bring the curiosity that you already have to help them now take their businesses to a whole new level as their trusted strategic advisor. So check it out. Go there to the episode description and find out what resources are available to you today to make the most of this. The second thing I'd like to do is the summary. Great discussion. I loved Adam's journey. Obviously, him starting when he was younger, working in the space of working with the family business, then working with the amusement park. I thought that was fun and exciting. Personally, I love going to those types of places. I think just the excitement, the energy there is fascinating. But as you pointed out, there was something lacking. And so he started his online business, did very well there, ended up selling that business, getting then into more business advisory space, offering CFO services. We talked about the difference between, say, fractional part-time CFO, what the role of a CFO is, how you can actually explain that to your clients to help them see value, and how it's different from bookkeeping, accounting services, perhaps tax preparation and planning services. I think that explanation is so key and important. We as accounting professionals do, in my opinion, a horrible job for our profession, muddying the waters and not clearly defining what is bookkeeping, what is accounting, what is tax preparation, what is tax planning, what is CFO services, what are advisory services, and in those explanations, doing a better job of actually delivering when we provide or offer those and we're paid for them. So that part of the discussion I thought was really important. We discussed also the idea of how do you go from basically wanting to offer the service to, in fact, doing so. And Adam brought up this idea of courting, basically asking questions, getting the customer to feel comfortable opening up about their business, asking those right questions to understand what they're trying to accomplish, and then trying to incorporate that into now forward-thinking business models, CFO type related services. He talked about charging for value. It's not the time you put in, it's the energy, the education, the experience you're bringing to the equation. It's all of that that becomes the game changer for the business. And so looking at the offering we're providing in that context, I thought was very helpful. The other that I thought was very good were the stories and illustrations that he shared as to how this has actually gone about. And I think that's very practical. It's great to hear some stories that illustrate what this would sound and look like. The other thing that I thought was also very important is realizing that we can make these differences with clients. It's not just a service where we're being paid for something and we hope or think it may result in some game changer for the client. No, it's these little tweaks and changes that can really impact cash flow, profit margins, and so forth. really impacting not just the business, but the value and worth of what it is they see we bring to the table. So lots of great things there. And then we ended with this idea of obviously considering how you can best move forward to incorporate these services in your business. And in fact, becoming that trusted strategic advisor, a profit and growth expert, a certified CFO project individual. These things, I think, are game changers for us as a profession, and I encourage you to check them out. So, Adam, what is your closing thought here today?
Yeah, my closing thought is just remember that your clients want someone that they trust to tell them what to do to have a growing and more profitable business, and they inherently trust you. So why not you be the one to tell them what to do to have a growing and more profitable business as their outsourced CFO?
Perfect. Well, with that, I'm going to encourage everyone to go now and subscribe to this podcast. Obviously, I want you to get the notifications each and every week when new episodes are released. Subscribe to this podcast. Of course, you can go back and listen to this one, but go back and listen to the previous episodes as well, where we've had excellent guests on sharing insights and perspectives that we all need to have as we're running our businesses. Go back and look at the previous episodes and see what you can glean for things you need to work on to grow your business and, in fact, have the premier accounting firm in your area. In addition to that, if you would like more information about these principles, how you can actually move into the CFO and advisory space, visit us at universalaccountingschool.com or give us a phone call. You can reach us at 801-265-3777. And always remember this, accounting success is universal. Take care and have a great day and be safe out there.